So Jason, thank you for that overview. So many of the companies that Edison works with will be publicly traded, and especially smaller companies that are looking to access the US markets for the very first time. Most US institutions can happily trade on a major foreign exchange. So why your platform?
Well, as you rightly point out, Rachel, the largest institutions, the Fidelities, the Janus, the Capitals, they've got global infrastructure that will allow them to trade securities all over the world directly. But once you start drilling down to the not Fidelities of the world, the second and third tier institutional investors, the retail, the family office, it's really difficult and expensive to trade directly into a foreign market. Companies want to be able to trade in the US, and investors want to be able to trade those companies in US dollars, in US time zone, and be able to get the information that they're used to seeing, whether that's financials in US dollars or press releases on the places where they do their financial research. And by just staying in your home market, you're missing out on those opportunities.
Okay, but why wouldn't a company just consider listing on NASDAQ or the New York Stock Exchange, for example?
Well, there's really 2 points as to why you wouldn't really jump into a national exchange. The first would be cost, and the second would be risk. So from a cost perspective, you have to think about listing on a national exchange here opens you up to an entire new reporting regimen, right? You now become a fully SEC reporting company, and all the costs that go with that. Sarbanes-Oxley compliance, reconciling to US GAAP, all the things that you need to be on a national exchange. That's incredibly costly, incredibly time consuming, so cost both in terms of money and management time. And then to that second point, risky. Companies know their home market disclosure. They know what their home market regulators are looking for. Do they really want to be in a position of then having to have a team of people understanding what an entirely different regulatory regime looks like? And so most international companies, and again, from the Roches and the Adidases of the world, down to really early stage growth small cap companies, recognize that you want to access the US. It's the largest pool of investment capital in the world. But how do you do it in a way that's cost effective, doesn't increase your risk burden, and gives you what you need to be able to access those investors?